All right, so as you already know, we already have a deposit of $200 in our balance, right? But we're already up by $30 in profit. Okay, so we are at $230. So I took some trades today. Okay, so as I promised, I'm going to start making this account relevant from today. So I took, even though I was actually very busy, but I tried my best actually make out like 1 hour of my time today. So that is just it. All right, so now if you are looking at this trend currently, please, you can see that this is a live mark. This is a chart. This is AUD USD chart. Okay, Australian dollar against the United States dollar. I can see the market is clearly in downtrend. Okay, it was formerly going down like this. It started going up and then follow the original trend. This is how the market moves. Okay, so like I told you, I'll take screenshots of my trades and then try to explain it to you. Then you are going to start practicing. Okay, from after watching this lesson. Okay, all right. So where are we? Okay, the next slide. Now on this slide, if you look carefully, this is the same. This is the entire picture of the trade. This is the entire chart. This is the entire chart. Okay, now this particular area here now is what I just removed here now. Okay, this is I zoomed out this particular chart. Okay, now if you look at this chart, you will notice that the market is moving in what we call channel. Okay, so all these things you have to figure it out in the market. So you have to be very observant in the market. You can see the market is moving in a channel like this. And if the market is moving in the channel, okay, these are our entry points, please. Okay, these are our entry points. Key levels, they are our entry points. Once the market hits this level, you can open a position. If you hit this level with a confirmation, please, after seeing a confirmation candlestick, you can open a trade. Okay, okay, this particular chart is the same thing as this chart. Is the same thing. This is the entire chart downtrend. Like I said, this particular channel, okay, I was watching the channel. Okay, and then after seeing this particular candlestick, I allowed the market to move to this level and then it hit this particular trend line. Okay, so as it hits this particular trend line, this area, we are supposed to expect buyers to enter at this particular area. Why would the buyers enter? Because let me show you. Okay, this is the chart. Okay, this is the market. This is the channel, right? So you can see the buyers entered at this level. Okay, why would the buyers enter at this level? Because initially this was a level of resistance. This was a level of resistance. It broke at this particular area. There was a breakout. It also worked as a level of resistance here also. After breakout, like I told you, if a resistance level gets broken, it becomes support. Okay, like this. Let's say this is a chart. This is our area. This level, this is what happened. Okay, it broke and then it will now work as support like this. Okay, and there are other reasons why you get confirmation so in the market. Okay, so this is the same thing that happened here now. The market was moving like this. Okay, like this. It broke. Okay, and then it didn't get to that level again until this time. So upon reaching this particular level area here, it's going to work as a support because it already worked here as support. after breakout. We saw buyers entered at that particular area. Okay, and remember the market is moving in this channel here. You can see. So that is the channel the market is moving. Now on this channel, you can see the trend, the lower trend line support that I drew, because this is where the buyers are entering from this level here. Okay, the buyers are entering on the support trend line. So if you are trading a channel, that is where you'll be opening your positions. Okay, you open positions at the lower level, and if you want to sell, you open position at the higher upper trend line. Now if a level gets broken, it becomes if a level of resistance broke or breaks rather, it's going to become support. If a support level breaks, it's going to become resistance. Okay, now on this particular chart, this is exactly what is happening. Let me use this arrow as a, this is, let's say this is our trend, this is our resistance level. Okay, so the market moves like this, and then eventually it broke. Okay, it comes to retest the level. This is what we call retest. Okay, retest like this, retest. Okay, it tests this same level of resistance again. So after testing the level, a strong level of resistance should be able to act as support. Okay, should be able to act as support. So the market started moving downward like this, like this, like this. Now because it is moving downwards like this, this is our trend line support, this is our trend line resistance. As the market gets to this particular area here, as the market gets to this particular area, because initially we already know that this area is a level of support. After breakout, after this breakout here, initially we know that it was a level of resistance. Definitely the market will reverse from this particular area to the upside. That is exactly what happened here. Where you saw these strong buyers entered, it's exactly what happened there. Okay, so this is exactly what happened here. You can see the market was moving in this channel, and then it shoots up. Why? Because of the previous analysis that I just gave. Okay, let me explain again. So this is our level, and then the market hits the level, reverse, hits the level, reverse. Finally it hits the level, and then it broke. It's now reversed again, because it is a level of support, resistance initially, resistance area is going to work as a support. A previous strong level of resistance should be able to hold the market and work as a level of support. So you must see 2 or 3 or more times that the level has worked as a level of resistance before breakout to expect the level to work as a level of support. After breakout, it goes up again. Then it started making this channel down to the previous level, and then I draw this channel like this, and then after the market must have hit this particular level, our trend line support, remember it was resistance, right? And it broke, it turned support here. Now this is our trend line support, and this is our trend line resistance. As the trend line support hits this particular level of resistance, again the previous level, the buyers will enter and shoot the market upward. It is exactly what you are seeing here. This particular buyers that entered, That's exactly what happened. Going back to the previous chart. Okay, so you can see the chart here. It's exactly what happened. Okay, there was the overall trend is a downtrend. Okay, this is our area. This is it. Okay, here is our level of resistance. The market goes up, goes down, goes up, goes down, breakout. Okay, got support, and then move up, started working in this channel. Okay, hit the support again, and then strong buyers push the market upwards. This is exactly what I was trying to illustrate. So this is the real chart. This is the real chart. Okay, so if you spot a channel, like this, you look out for the entry point that I just explained. Now, after looking at this particular channel, how do you open a position? You have to wait for a confirmation candlestick, either a hammer candlestick like this, At least you have seen hammer. I don't want to go waste time and start drawing hammer. Is either you see a hammer candlestick, an inverted hammer, a hanging man, a spinning top candle, or an engulfing candle. Okay, I believe by now you should be familiar with all these candlesticks. Then you are going to open a position at the level. Now, look at this particular level. We are seeing an engulfing candlestick here. Okay, the last candlestick that this particular candlestick, this is the last bearish candlestick that closed. Okay, and it closed at this particular level. So that is our level of support where we are expecting the buyers to enter. After the closing of that bearish candlestick at that level, you will need to wait for another candlestick to confirm if the market will go up or down. This is a bullish engulfing candle, a very strong candle. Okay, after seeing this bullish engulfing candle, you can open a trading position after this particular candlestick. You can see that the trade goes up. You can see. So an engulfing candle is a candle that looks like this. Sorry. This is an engulfing. You have a small candle and then you have a bigger candle like this. So this is an engulfing candle. The previous candle is small, the next candle is bigger. It completely overshadows the previous candle. It means that either buyers or sellers are strong. If it is a support level, it means that the buyers are strong. Like in this scenario, this is a support level. These are support. So you are seeing this engulfing candle. It means that the buyers are very strong. They are willing to push the market to the upside. Okay, the buyers are willing to take the price higher. Okay, now if you look carefully, you will see that this is an inverted hammer at this resistance level. An inverted hammer is a candlestick that it always will happen after an uptrend. That's why we call it an inverted. You know, this is a hammer. This is a hammer candlestick. Then an inverted hammer is the opposite of hammer. You can see. So this is an inverted hammer. Okay, so here we are seeing an inverted hammer. This is an inverted hammer. A reversal sign. And you can see after the appearance of that inverted hammer, you see the market goes down. So after seeing that inverted hammer, you can open a position to trade. You can open a position. Okay, you can open a position. And now we already know that if it is a perfect channel, this is a perfect channel. there are no buyers and sellers in between that appear. Sometimes in the middle of the trend, maybe this candle may appear as a bearish candle, but the market will still go up and then hit that level and reverse. Maybe in the middle of the reversal of this bearish movement of this particular chart here, maybe in between you can spot one or two bullish candlestick. It doesn't mean the market will reverse. The market must complete this channel. It must complete moving in this channel. It must complete it like this. So if you see a bullish candlestick, it is just a retracement candle, and it may happen as a result of previous support or resistance. So sometimes the channel may not appear perfect like this. It may appear with buyers or sellers in between. If it is a downtrend or a bearish trend, you can see spot one or two buyers. If it's a bullish trend, you can spot one or two sellers in it. Okay. Now, there is something now we need to know. What you need to notice here is that after you can see, because I personally I didn't open a trade on this particular after seeing this bullish engulfing candle, because the candle is too long. It's too long. If the candle, look at how the candle appear. Look at, it's something like this. This is how the candle appear. It's too long. If the candle had appeared like this, if the candle had appeared like this, it's also an engulfing candle, I would have opened a position on the next trade. Okay, but because of this, the candle appeared like this, is too strong, because this is a small channel, it's not a wide channel. So that's why I tell you, trading sometimes is all about experience. This is a wide channel, and the candle almost got to the level of this particular channel here. Even though it's an engulfing candle, you can open your position with one candlestick, but sometimes, to be on the safe side, although trading is risky, so you just analyze your trade, and if the analysis is okay by you, you open your position. Okay, you open your position. So I didn't open any position. The market kept going higher and higher. I was just looking at it. Now, the reason why, if you notice very well, there is a rejection at this particular candle. After this candle, we are seeing a rejection. Okay, and this particular chart, the candle closed below. It closed below the support level. But this particular candlestick, let me zoom out. This particular candlestick opened above the support level. That particular candlestick opened above the support level. When I saw the opening price of that candle, I knew that the market is not going to hold that level again. It's no longer going to hold this support level. It's going to break. It's going to break. Okay, the market is not going to hold that level again. It is going to break because of the opening price. And yes, after that it was a bullish candle, a bullish candle, a bullish candle. But if you look carefully, there is a support level here again. So I was also looking at this support level here. Let me remove everything. I was also looking at this resistance level, this particular level of resistance. Okay, I was looking at the level of resistance, thinking maybe because sellers enter from here, as the market is moving like this, if it gets to this level, it may reverse. It may reverse. Okay, so in trading, you are looking at all the levels. You are calculating the probability of seeing a reversal or not. Okay, so, and now after that, I looked at it. I said, okay, I ignored the trade. Okay, I ignored it. Also, I ignored it because of this particular bullish move. because of this strong bullish move. Okay, it may easily break this particular level here. It may easily break. This level may easily break. It may easily break. It may reverse, it may not reverse. Okay. So as I was watching the market, so you can see eventually the market reversed. We got one bearish candlestick that entered. Sellers enter. Why? Because of this level. Now, if you look carefully, that is an inverted hammer. That is an inverted hammer on the level. Okay. So after spotting that inverted hammer, you can open a position for like maybe 5 minutes. Okay. If you have opened a position after spotting this inverted hammer, you are expecting, because sellers entered from this level, we can expect the sellers to also enter and push the market to this level again. So that was what I was looking at. I was expecting the sellers to now, after seeing that inverted hammer, I was expecting the sellers to enter, hit this level, and then go up. Why? Because the buyers hit this level like this, forming a W pattern or a double bottom pattern. Okay, so that was what I was looking at, but it didn't happen. Why? Because at this particular area, the market started at this small area here, the market was just ranging. There was no particular direction in the market. But if I had opened a position of 5 minutes here, I would have also been in profit. Okay, I would have been in profit because the trade would have closed in my direction, because the inverted hammer actually worked. Okay, so you can see that there is an inverted hammer, a reversal candlestick at the level. It worked. Okay, and even though normally you are supposed to expect, you are supposed to look, there are other factors that you are supposed to look out for, because this level only worked just once as a resistance here, but if you look at previously, it worked as support here. So this was what I used to verify this particular level of resistance, because for you to open a position, the market must have used the level like twice. Then on the third attempt, you can now open a particular position for the third attempt. Okay, you can open your position. So, but I don't need to see that, because the market has actually reacted at this particular area. Okay, and then after breakout, it broke at this particular area. It now got support, working as a support. And after seeing this particular bullish move, okay, I saw this is strong bias, and then finally we saw little small bullish candle, and finally we saw a green massive candle. After that, we spotted this bearish reversal candlestick pattern, this particular one, an inverted hammer candlestick. After seeing that, that is our entry signal. We don't need any other further confirmation, so we can open a trade there. If the trade goes in our direction, fine. If it goes against us, we don't have control over it. Okay, so that is that. So what I'm this if you spot this particular type of market, a channel, you should open your trade after getting confirmation. Okay, because if you even look carefully again, behind where this buyer sellers enter from, this particular candle is a hammer candlestick at the level. This candle is a hammer candlestick, a reversal sign, a reversal signal. Okay, that is a hammer candlestick, a reversal signal. The market reverse. Now this is an inverted hammer. This is an inverted hammer candlestick. The market reverse. This particular candle is an inverted hammer candlestick. Okay, sorry, this is not a hammer, rather this is a hanging man. A hanging man, a type of hammer candlestick, but it is formed only in an uptrend. That is a hanging man. This is an inverted hammer. This particular one is an inverted hammer. A hanging man, inverted hammer, hammer. Sorry, inverted hammer also. So you can see that this particular candles reverse the market. This is an engulfing candle. So you can see these are our entry signals. Okay, these are our signals to open positions in the market. Very clear and simple market. One thing with the market is that once you understand what the market is doing, you'll be able to open profitable trades. But if you don't understand what the market is doing, you can in no way open profitable trades. That's why you need to wait. Okay, sometimes it may take you 1 hour, 2 hours, 30 minutes to spot a particular trade. Okay, or to open a particular position. So if you spot all these signals, you open your position on the next candle. As simple as that. Okay. So in trading, the market move from level to level. If the market is going up, it's going to hit previous levels and go down because the market move in wave style, like wave pattern like this. The market is always moving like this, like this. That is how the market moves. Okay, it goes down, up, down, continuous up and down movement. So your ability to spot the reversal points is is the most important thing here. And how can you spot the reversal point? Is by looking at key levels, just like the way I plotted here. Key perfect levels, you can get your good entry signals. Okay, so now after spotting this particular level, I now zoomed out the chart. I draw this particular area here again, this particular level here again, because there is a level of resistance. Because if you look carefully, the market move up like this, hits that level, goes down. Now the market is trying to go back to that level again. So I drew this particular level here. Okay, so this is the next entry point for sellers. That is a resistance level. So when I went back previous chart, it was actually working. Okay, so I'm now waiting for the market to enter this particular area. I was waiting for the market to enter this particular area, then open a position. Okay, you can see. After this, we saw this, and then I was looking at this. Was the next scenario I was looking at in the chart. This was the next scenario in the market. Okay, so but sometimes the market may not get to the level before it reversed. Okay, so I was still waiting for the market to hit that particular level. So I saw sellers entered. You can see that sellers enter at this particular candle. Okay, remember the market has not hit our level. This is our level. This is the level we are waiting for the market to touch. Now if the market touch this level, we are now going to look for a reversal signal. Either an engulfing candlestick like this, a hammer candlestick, an inverted hammer candlestick like this. Okay, a hanging man like this, or an inverted hammer like this, or maybe a spinning top candle. A spinning top candle is a small candle that look like this, with little wick up and above. This is what a spinning top candle looks like. So I was waiting. Finally, the market hit the level. Okay, this was the level. Eventually, the market got to the level and we got our signal. Finally, this level, the market hit the level here. What signal did I get? If you look after this strong bullish candle, the next candle was a spinning top candle. We are seeing strong buyers, but eventually the buyers became weak, forming a bullish spinning top candle. I didn't open my trade on the next immediately. I waited for another confirmation candlestick like this one. Okay, so that is I waited for a bearish engulfing candle, and then I opened my trade. You can open a trade for the next 5 minutes or 1 minute or so, because that is a perfect setup. This is how the setup looks like. Let me see if I can draw something simple. So this is a strong bullish candlestick, let's assume, or let me see, let me change the color. Let me look for a blue or a green. So this is a strong bullish candlestick. Okay, after spotting that strong bullish candlestick, we now spot a small candlestick, a spinning top with upper and lower wicks. After spotting that spinning top candle, we now saw a bearish engulfing candlestick like this. The bearish engulfing candle broke this particular lower wick area here of this spinning top. It broke this level. Okay, or it's closed below the level. This is exactly what I'm illustrating here. I'm just using it in a bigger picture. Okay, this area, this chart is what I'm trying to explain. Now, after spotting, this was a strong candle inside the area already, but because of the power of buyers, we cannot open a position because the buyers can still push the market higher. Okay, the buyers can still push the market higher. We got a spinning top candle, which is a reversal signal. Okay, but after seeing that reversal signal, sometimes the market may still continue. It's better to finally wait for a confirmation candlestick like this. Now, after getting a confirmation candlestick like that, this entire chart is a reversal signal in the market. I now open a position. I now open the trade after seeing that reversal signal, because if you look at the chart from here, we saw strong sellers. We saw strong sellers. So after seeing this reversal signal, strong sellers can still push the market downwards. Okay, so this is it. So you can see that the market goes down. This was the level we are looking at. This is exactly what I drew. Okay, after seeing this strong bullish candle, after seeing this strong bullish candlestick, inside the area, I saw this small spinning top candle, and I waited for this particular engulfing candle, bearish engulfing candle, to confirm the downtrend, and then you can see the market goes down. Very strong bearish movement. So you can see we're in profit. Okay, we are in profit. So provided the trade stays below your entry point, when you sell, you will be in profit. But if it's above, you are going to be in loss. Okay, so if you are going with sellers, you are telling us that the market will go down, and if it goes down and closes, it is in your favor, you will be in profit. If you bought the market and it goes up and it closes above your entry point, you will be in profit. So you can see this scenario. You can see what I'm talking about, the signals in the market. So you spot a strong level first, a very strong level first, a strong level like this. Let's say this is our level of resistance. Okay, and then the market, this is our strong level of resistance. This is our resistance level, and then we saw a strong bullish candle hit the level. Okay, and then finally we saw a small bearish a bullish candle like that, then it may have wicks, it may not have wicks. A spinning top candle, it can be a hammer, it can be an inverted hammer, it can be an hanging man. But in this scenario, what we saw was a spinning top candle, a bullish spinning top candle. Finally, eventually, we saw a bearish engulfing candle. We saw a bearish engulfing candle completely overshadow the spinning top. A signal that the market wants to go down. So after spotting this particular signal, I open the position, and then you can see the market goes down like that, like this, like this. Okay, hope I'm making sense here, please. So you can see the market goes down and we're in profit. So initially we had 230, now we have $234. We have made a profit of $4. It depends on the amount that I used to open the trade. All these ones I'm still going to show you them, but I'm just explaining my trades right now. After this particular explanation, I will open a live chart, show you how you can switch between the real and live accounts. Okay, like I told you, don't trade more than $1, please. All right. So that trade was done and dusted. I was now looking at this particular chart. So there was an aggressive selling pressure in this market. Okay, so it broke this previous level of resistance support, as we all know. This particular strong bullish candle broke it. Okay, after breakout, we knew that there is a strong support level here, but it didn't get to that level before the market pushed up again. So I was looking at this particular level. I was thinking and hoping this particular candle will close, this candle will close below the level, so I can, because we already know that it was a previous resistance. After a resistance gets broken, it works as support. Now it got broken again, it's going to work as resistance. Okay, this is our chart, this is our level of resistance, for example. Okay, this a strong bearish candle broke the, I'm coming. This is our strong resistance, and we are seeing a strong breakout from the sellers, massive breakout. After that, we saw buyers try to enter. We saw buyer green candle, we saw another green candle like this, even though the candle was up high like this. So I was expecting the candle, what I'm expecting this particular candle to close like this, and then maybe with a small rejection above. The rejection is telling me that the sellers are going to enter into the market. Okay, because we already know that that level is a level of resistance, so we can expect the market, at least even if it is for one candlestick, to drop. We can expect sellers to enter. So that was what I was looking out for when I saw this the new move here, this particular candle. I was expecting it's going to close below this level here that I draw. Okay, so let's see what happened. Now it actually didn't close below the level, but it is a breakout. Sometimes we used to have what we call fake breakouts in the market. There are 70% chances of reversal if we spot a fake breakout. So the market broke the level. I opened a trade here. Sorry, yeah, I opened a trade there, and it was a Marubozu candlestick. Okay, a reversal candlestick broke out of the level. Okay, let me draw the level again. This is our resistance level. This was the strong candlestick that broke the level, and then we saw a bullish candle, then a small bearish candle in between, then another bullish Marubozu candlestick broke the level. A Marubozu candlestick is a strong candlestick like this. There is no upper and or lower wick. This is what we call a Marubozu candlestick. I've already told you that. Okay, so after spotting that Marubozu candlestick that broke the level, at this I opened a trade for just 1 minute this time around. I didn't open a trade for 5 minutes. I opened a trade for 1 minute candlestick. This time around, the candle closed as a bearish candlestick because it was a previous level of resistance. 70% of the time, after spotting breakouts, the market may try to reverse. Okay, this candle, this was a breakout candlestick. Okay, it broke the level strong like this, and then now we are seeing a breakout, a signal, a Marubozu. I was expecting, what I was just looking out for at that level, I was just expecting a reversal candlestick, any candlestick, or let the market candle close with a rejection above, then I can open a trade for 1 minute. And you can see we are now up by $239. There it was 234, right? There's $239. Now, at this particular level, I opened two because I was being distracted. So in trading, please, you have to concentrate. You really need to do your best to concentrate because of to avoid distractions. So I was distracted. I didn't look at the chart. I had a phone call. I went out, and then the market was actually going down like this. Okay. So simply because I already drew this level, I already knew that this level here is a level of support. Turn the resistance, turn support, turn the resistance. So when I spot this small bullish candlestick here, when I spot this small candlestick here, I thought the market will reverse here. I say, okay, this is a weak candlestick, a very weak candlestick. The market should reverse. But when I opened the trade, it didn't reverse. It went against me. Okay, it went against me twice because I opened two positions. So because I was distracted, I was not looking at the chart. I just came in and saw where the level is. I said, the market is this, that. I just opened it again without analysis, nothing, because I already have previous analysis. So you need to be looking at this chart consistently. You need to understand what the market is trying to do. Okay, so I got lost and I was back to $230 again from $239. Okay, so finally, I wait and I say, okay, if that be the case, I now remember that initially we had a very strong bearish move down here. We had a very strong bearish move here like this. You can see a reversal level here. Okay, remember this strong bearish move that we opened our first trade from, that broke this particular level. Now after seeing a strong level, a strong bearish candlestick at this particular level, then I now realize, and I saw rejections above. I now draw the complete area. Okay, like I told you, support and resistance are not on a single line, they are an area. Let me zoom out. Okay, they are an area on the chart. So this area is our complete level of support. You can see this is our complete level of support. So when the market got to that levels of support, I saw small rejection. I saw this particular area. I already knew that from this level we can expect the buyers to enter into the market. So I opened a position for this particular trade. For this particular candle, you can see the buyers entered. Okay, so you can see at this time the market moved like this and then like this. So you can see the new style of movement in the market. Okay, so I didn't actually look out for a reversal candlestick here because the market usually gets to an exhaustion phase sometimes. Okay, because previously we had something like a channel. If you remember, this was our channel. So after breakouts, the market work as support again, and then we had our trend line support like this. I mean our horizontal line support. So you can see this is the reason the market shoot up. Very strong buyers entered, very strong entry, and then okay. So after that uh, trade, I took. Now I wanted to open a position here, but I waited here after the close. But if you notice, this particular candle closed with a strong body. Okay, the candle closed with a strong body. This is what the market did. Let's say this is our resistance level. Okay, let me bring it down. This is our level of resistance. Okay, we saw a strong bullish candle or a green candle. From this level, it goes up all the way. Okay, eventually it now drop and close exactly at the level with a strong rejection above. And we already know that this level is a buyer's area, sorry, seller's area, meaning the sellers can enter at any time. But looking at this week, sometimes looking at this particular week or shadow in the market, in this scenario, after looking at this strong buyer's pressure, the chances of buyers entering the market again may be high, but for the fact that the market closed exactly at the seller's area is to try to avoid the trade. Okay, so I avoided that trade, and then eventually we saw another strong bullish candlestick. We saw another strong bullish candlestick. Now this time around, the candlestick closed very strong, far from the level, without much upper rejection. There is no much upper rejection after this particular bullish candlestick closed. So I was now looking at it. I knew that I was waiting for the market to get to this particular level. I thought, okay, this time around the market may reach that level, so I will go with the buyers again. But this time around, I will wait for the price to retrace. There's what we call retracement in price. Retracement where a situation where the price goes down, you wait for it to go down before it finally goes up. So you open your trade somewhere around here. Okay, so that should in case the trade closed above like this, you will still be in profit. Okay, so that was what I did here. I waited for this particular candle. The trade got to this level. I opened my position here for a buy. Okay, for a buy trade, and even though it closed as a bearish candlestick, I was still in profit. So you can see we have $243 in profit. Okay, after that trade, I actually didn't take any other trade. I was waiting for the market to give me another signal, a good signal, because of after that particular trade, you can see the buyers pushed the market, retraced a strong bullish candlestick, and then it was after this breakout that we are seeing this bearish candlestick. Okay, so I was waiting. All right, so you can see this is the clear chart. This is the clear naked chart in the market. So I had some few losses of that trade, but I recovered them. So at this particular time, I now change that chart, because sometimes if the market is no longer giving us reason to trade or to be in the market, we have to exit the market. So immediately I opened this particular chart, I noticed something. I noticed something was happening. There's what we call trading with candlestick psychology. I'm going to talk about that as a separate class on its own. Candlestick psychology is when you trade according to the situation of the market. You trade according to the situation of the market. Okay. So when I opened the next chart, I noticed that I'm seeing two buyers, a small spinning top candle sellers, two bullish candle, a small spinning top candle sellers, two bullish candle. So after seeing this last two bullish candle, I was expecting this particular candle to also close as a spinning top candle, just like the previous ones we saw. So after seeing that, I am now expecting two bullish candlestick again, like that. I was expecting two bullish candlesticks. So I opened a trade here, and I also opened a trade here. So I was up by $247. So we started with $200. Now we have $47 in profit. You can see it clearly on your screen. So this is what we call candlestick psychology trading. But this type of trading, I'm not advising you to go and do. You only do this with experience, please. When you have experience. Okay, when you have experience. But for now, you are going to open your trades at the levels, just like the way I showed you at the beginning of this class. You are going to open your trades at the levels, only at the levels, and with 5 minutes time frame. Because for a new trader, 1 minute candlestick, you are going to incur a lot of losses, because sometimes you have a late entry position. Now, because this what I'm teaching you right now is option forex, and I told you in the digital market world we have different types of trading. Okay, we have the forex trading, we have the option forex trading. Now this is forex trading. Actually, the same chart, the same time, everything the same thing, the news, everything affect the markets. We also have indices trading, but those indices, they are like market makers. They are simulated charts. They are not real markets. So real life events and news doesn't affect it. Okay, so in this option forex, why they call it options is because you can pick out a particular candle, open a trade on that candle. Once the trade close in your favor, you will be in profit. Depends on the time frame that you choose. You can open a trade for 1 minute, which is the least. You can open a trade for 1 minute. If you open a trade for 1 minute and the market goes up or it goes down, depends on your direction. If you are buying and it goes up, you will be in profit. If you are selling and it goes down after 1 minute, you will be in profit. If you are also selling, the same thing. If you sell for 1 minute and it goes down, you will be in profit. Okay, but it is the same thing. It is the same forex, but the slight difference now is that in forex you open your position at this level and say, okay, the market will go up. You enter with your particular lot size. So I can even switch, even on the forex, there's a chart here. I can switch it here and also open for trade on forex market with the same chart. So it is not different, it is the same thing. The only thing is that on the options, you can open trade on individual candlesticks. Okay, you can open trade on each of these candlesticks, or you can open a longer trade also for like 5 minutes. You can buy, okay, say that, okay, now you know that, okay, this candle is going up, let me buy at this level for the next 5 minutes. And this candlestick, each of them represent 1 minute. This is 1 minute candle. So if you bought after seeing this particular candle, this is 1, 2, 3, 4, 5. After 5 minutes, the trade closes and you are in profit. So it's the same thing. There's no difference with forex. So this is forex also. So the reason why I'm bringing up this option forex, because you need to have a thorough knowledge of candlesticks analysis. This is going to open your mind to how to analyze Japanese candlesticks. And it's going to show you how the trend functions, how the trend works. Okay, it's going to show you how the market will move. Okay, And because here you can have a small deposit amount and also and try to grow your capital little by little, just like we saw in this scenario. You can see at this particular level here, we opened a trade from here. You can see the market goes down. So if we're to open this using this our forex platform, do you know how many pips this market has moved? Depends on your lot size. You must have made a lot of money from this move alone. So much money. Let's say you even put your stop loss somewhere around here, looking at that strong level here. Because of this strong level of support, you decide to put your stop loss there. So from here you have captured so many pips down to this level. Even though you can, it's not possible to capture everything because you not know where exactly the market will close like this, and you cannot open a blind position or a window position. I call it window position, like you just leave it open like that without putting your stop loss or your take profit. Okay, so if you look carefully, this market form what we call a W pattern or a double top, double bottom. Look at, and it goes up. You can see this is a double bottom pattern. This is the neckline. If the market breaks the neckline, you know that you can expect the market to push higher. Okay, so if you are in forex, this particular pattern is the double bottom pattern. Okay, the market goes down like this, and you see your signal. This is an engulfing candle confirming the double bottom. Okay, and secondly, after seeing that engulfing candle, you are not going to open your position immediately because the market can reverse. You must see a breakout of this trend line, sorry, this neckline. Okay, so after breakout of that neckline, sometimes the market goes up, sometimes the market will just go high direct, sometimes it drops, retests the level, and then finally goes up, just like the way it happened here. It retested this trend, this neckline. The market retested this neckline after the breakout. You can see after this breakout, it hits this level and then it shoots up. So if you are going to put your stop loss should be somewhere below the neckline like this. So should in case the market wants to make any retest. Okay, so I closed with a position profit of $247. All right, so let me see if I can open a real market chart and just make it $50 on over the counter market before I go to bed, because right now okay, let me just open the market and see what is happening. So you can see this is an uptrend market, exactly what I just described in this in our last class. Even though this is an uptrend market, but I'm looking at exactly, you can see exactly what I just drew. I just opened this chart. You can see we have $247. The trade I opened with just $2 right now. So if the trade closes in our favor, we are going to be in profit. Okay, if it closes in our favor, we are going to be in profit, of which I'm expecting it to close in our favor because that is a reversal signal. I spotted a quick reversal signal I just spotted, but it closed against us because I opened it too. Okay, because of the I didn't open the trade. You can see this is a reversal signal. Okay, that trade there is a reversal signal. So sometimes this type of things happens in the market. Okay, so you can see I'm on a live chart right now. You can see this strong bullish candlestick. After that, we are seeing this a type of spinning top or a hanging man candlestick. Then the next candle was a engulfing candle. So we can expect the buyers, the sellers, to enter into the market like that. Okay, so we can expect the sellers, but this is a very strong uptrend. Okay, so the buyers are very very powerful at this time, so you need to look at the trend also. Okay, also we need to look at the trend. So I'll look at another chart. So if you want to look out for other charts, you can just click the chart session and look for possible entry positions. Okay, I just want to take some quick trades so that you can see how this thing functions, but the trades are actually going against me because I'm not analyzing anything here. I'm just looking at the short market situations. Okay, I'm not analyzing anything here. I'm just looking at short trades. So you can see that I've lost 2 trades now. You can see 2 straight trades. Me that wanted to raise these trades to $50. You can see. So I finally opened another position here. I just hope it will not go against me this time around because I'm not analyzing anything here. I'm just taking this trade for you to see. Let you not seem as if I'm not on the live. I didn't come up live. So the market have closed. This is a simulated market, but see, provided I'm using my real account to take open trades here, if I make profits, I will still get. It's going to be also reflect in my balance. If I lose the trade, it's also going to reflect in my balance as a losing trade. Okay, so this particular one, we are back up again. Okay, so we are seeing a strong bullish movement. Okay, this trade would have been a good trade if I had opened it on time. Okay, so I'm going to just open a one-time trade and then have a profit of $250 and then I'll be out. Okay, since I'm not analyzing anything, let me just reduce my trade balance. You can open your trade with any balance, any amount of your choice. Okay, this is, they can notice something happened here. There's what we call gap ups and gap downs in the market. Okay, I think those concepts are still, we need to explain it. A gap down is a situation where the market opens below the closing price of the previous candle, while a gap up, the market opens above the previous price of the previous candlestick. Like you can see this particular candlestick, look at where it closed. You can see this particular bullish candlestick. This bullish candlestick closed above here, but look at where the next candle, the bearish candle, opened, or the current running candle. I don't know if it's going to close as a bearish candlestick. So it's opened below the closing price. Ideally, it's supposed to open exactly where this candle closed, like this. It's supposed to open there, but it didn't. It gapped down. So this is what we call a gap. This is a gap down, and I'm not certain if the market should go down or should go up, because this is not a real market. You can see these are funny currency pairs. Some of them are just cryptocurrency assets. Okay, some of them are crypto assets. If I get a good, if I see a good trading opportunity or a good signal, I will open a trade. Now this is a good signal on this live current chart because we are seeing a hanging man, but I don't know. Let me see what's the next, how this candle will close. Let's see. I want it to close without any rejection. Then this time around, I will not open the trade immediately because of the uh, situation of this particular market. This after seeing a hanging man, I'm seeing an engulfing candle. Okay, you can see the sellers entered directly. So I missed this opportunity because I was waiting for what we call retracement. Okay, I was waiting for the price to retrace. This is, I'm just taking quick trades here because you can see I already have experience in the market. So I can just look at the chart and predict the next direction quickly. Okay, so you can see if I had opened this trade on this current running candlestick, it would have been trade, but I didn't open the trade even though I got the good signal. You can see this is a hanging man. The next candle was a bearish candle. Now we are seeing strong rejection above, but the buyers actually are here. Okay, so the market should hit that level. I also missed this trading. I would have been done by now. Okay, because I'm explaining this concept, so it's taking up time for me to open these trades. So you can see, so right now the market is not, let me see, you need to go back and see previous levels. This is how you look at, you need to navigate the chart to see previous levels of resistances and previous levels of support. So I'm going to leave, I already left that chart. Let me open another one. So like I told you, this is a simulated market. This is not a real market. This market is regulated by the broker. Okay, all right. So this is not a real market. So anything is a very risky market. Anything can happen here. You can lose your money anytime. You can also not lose. But once you understand the psychology behind the candlesticks, you are good to go. Okay. If you understand the psychology behind the candlesticks, you can open profitable positions. Okay. So once I see a good trading setup opportunity in the market, I already missed those two trades, even though their market was really bad. In fact, I've not even taught you about good and bad markets. We are going to show you that the bad markets are just markets that has too many wicks, too many rejections. Okay. This is a confusing area. This is confusing, a bit confusing, but I'm not going to open a position here because it's not, the story is not clear. Okay, I wanted to go with sellers because it is a downtrend and I'm looking at the market is going down. Okay, looking at this current chart, because if you look at the current chart, at some point I'm seeing just single bullish candlesticks. Okay, so if I had gone with the sellers on this particular candle, this is just a 1 minute candle, quick trading that I'm taking, just taking quick trades here. But if this candle will close as a bullish candle, then we can go for the next trade with the next two candlesticks. Okay, so you can see the issue with 1 minute. You can see the candle now, there's a very strong selling pressure in the market. So the candle opened, it didn't open exactly where I wanted it to open. That's why I'm saying for beginner traders, you are going to open trades with 5 minutes trading. I'm going to show you where you open 5 minutes trading. Okay, you change the time to 5 minutes. So that means if you open your position, the trade will close after 5 minutes. So you can see, you see what I'm telling you, this candle has stopped following the pattern. You can see the market stopped following the pattern. So you can see the problem. This is why the simulated market is sometimes they manipulate. So this is not a real market. Okay, So I lost that trade again, but this time around I opened with sellers again. I don't know, but there is a previous level of support, but I'm looking at the current candlesticks. They are very strong. The candles, the sellers are very strong, so maybe they may try to go to push the market lower. Even though there is a small level behind, you can see the market respects the level. You can see the buyers entered again. I actually saw this small level. I know you may be wondering where I'm looking at the levels. I just want to take some quick trades before I close this session. But you can see the trades are actually going against me because I'm not analyzing anything. I'm just taking these trades just to show you how the market functions. I have opened another trade. Now you are taking sequential trading like this is very bad. Like very bad. There's no way you will get a good result if you are taking trades like this. You cannot get a good result. Okay, so you can see this trade is also a loss, but I'm not going to close the session in loss. I'm going to close it in profit.